The government is ready to talk with startups that are looking to move overseas. Finance Minister Nirmala Sitharaman said this in her address at a think tank in Washington, D.C. earlier this week. She also assured that the government will do as much as it can to help startups stay in India. While simplifying domiciling options for startups, allowing them to list on global stock exchanges are among the 160 policy asks that investor body IVCA has put on the table for the government. The finance minister, as she promised in this year's budget, has set up an expert committee to address the concerns of private equity and venture capital investors. This expert committee, headed by former SEBI chief M. Damodharan, has been asked to submit its recommendations by December. After conducting a comprehensive study to remove end-to-end frictions in regulatory policy and taxation so that it becomes easier for private equity and venture capital investors to invest in India and in turn power India's startup economy. The investor community, of course, is pleased with the move, but as veteran investors have told us, the challenge before the government in carrying out an end-to-end regulatory cleanup is nothing short of what was done to put in place the Insolvency and Bankruptcy Code in 2016. Not all practices of alternative investment funds are baked into tax laws. There is still no tax parity in sale of unlisted versus listed shares. ESOPs continue to be taxed twice. A lot of domestic capital that is locked up with PSUs, insurers and provident funds is yet to be funneled into startups. The list, as we said, is long, and the industry says the setting up of the expert committee is a step in the right direction. Interestingly, this also comes at a time when the funding winter is getting frosty, with Indian startups suffering their worst quarter in terms of VC funding in 2 years. Hello and welcome to Young Turks. I'm Shereen Bhan. You're watching India's longest-running show on startups and entrepreneurship. Joining me on the show today, Ashley Menezes, partner and CEO at Chris Capital. Ashley is the vice chairperson of the Indian Venture and Alternate Capital Association, or IVCA. Also with us, Gopal Srinivasan, chairman and managing director of TVS Capital Funds and board member of IVCA, and Pratibha Jain, Group General Counsel and Head of Corporate Affairs at Everstone Group. She's also the co-chair of IVCA's Regulatory Affairs Committee. Pratibha, Ashley and Mr. Srinivasan, many thanks for joining us here on CNBC TV 18. So let's get started with this committee. The finance minister had made the announcement in the budget. It's been a long wait, but finally we do have a committee in place, and it's headed by this former SEBI chief M. Damodharan. Ashley, let me start by asking you about the progress that's already been made. I understand that meetings have started. IVCA has met with the committee. What was the first impression in terms of how this committee intends to look at this 160 list of demands that you're putting on the table?
Thank you, Shereen, for having us on the show. This was the ask for an expert committee was something that we've talked about for some time. It is necessary in our view to capture a few things. Initially when private equity and venture capital has been investing in India, it's been through a myriad of laws that have been set up for other purposes, and there's no real set of regulations that has addressed this. Holistically, considering the fact that there are some global funds, Indian funds, capturing all of that. So this was definitely a need of the hour. We were very happy to note that, the finance minister in her budget speech in February, talked about setting this up. The committee has been functioning, quite well. I think we had a meeting. The meeting was very, very constructive. The committee members were receptive to suggestions. The list may be a long number of 160, but broadly there were 2 or 3 sort of categories of us, right? One was merely in the form of clarifications. What is the best way to reduce some friction, ease of investing? And then the other was, the committee actually asked us to come up with innovative ideas that can help streamline both the investments into India as well as attracting long-term domestic, foreign capital into India. So it was ideas being thrown out, and as I said, the committee was extremely receptive to it. Don't go by the number of sub points because some of these are minutiae points, but I think conceptually, it was a very, very constructive and productive session.
Okay, a constructive and productive session. Mr. Srinivasan, let me address this issue with you because, when we last spoke about this, you had said that what is required has to be of the magnitude of what the government attempted to do with the bankruptcy code, with the insolvency and bankruptcy code. They had then amended 41 sections of law and repealed one law and brought in a new law. You said then we need something like that for an end-to-end cleanup of the PEVC startup ecosystem. Now, as Ashley said, there are some issues that require clarification. There are some issues that need to be addressed to alleviate the regulatory friction. And there are ideas that the committee is also seeking to try and see what can be done to unlock domestic capital and continue to see a flow of foreign capital into the startup ecosystem. So let's start with addressing clarification and regulatory friction, because those are the two main points that the committee is going to look at. That was the terms of reference when the finance minister had announced the committee in her budget speech. So let's address those issues and prioritize for me what you want the committee to do. What are the specific areas that you want the committee to focus on?
Thank you, Shereen. Thank you for having us, and thank you for actually being, in some sense, a virtual expert committee on issues to do with startups, VC, and PE at your show. I think it's been one place where one can listen over time to how this industry has evolved. I think this committee has the potential, if its recommendations are accepted, which I believe they should be, given the stature and standing of the members of this committee, of actually creating close to a WhatsApp moment, to use that oft-used expression, for this industry, in terms of removing friction, putting in accelerants, unleashing domestic capital, making foreign capital flow easier, and most importantly, making investments into startups and growth, including delisting, very much easier. So you have very nicely summarized the 5 buckets. I will just say the most important issues would be, number one, bake in all the business model and vocabulary of this industry, the AIF industry, into the direct tax code, the indirect tax code, so that things like carried interest are clearly defined, clearly classified as long-term capital gains. Make sure that management of foreign money in India does not attract GST when pooled into AIFs. Make sure that when you look at the value at which assets are carried in a fund, they are truly pass-through in nature, and they're carried at the cost of commitment, which means the cost at which investors have invested into the fund, rather than the cost of purchase of securities. These would be, in my mind, the top 3 things from the industry point of view. From the startup ecosystem and the company point of view, I think there will be a lot of interesting challenges. I will name 2, if I may. One is delisting. There is a great opportunity now, given the vast number of listed companies in India, that many of them, private equity can come, take over those companies. But the delisting procedures, I'm sure you must have heard, Shereen, in your show, I think the word cumbersome could be a mild way of stating it. So there could be a lot of liberation of those companies by getting private equity if the delisting procedures are made much simpler. There could be issues like that from the point of view of startups, some minor issues relating to type of instruments being more flexible. I think we need to address that as a central issue, that all of this finally means more money for startups, more money for growth, and better use of domestic capital. They may be the 3 big framing outcomes of this committee, rather than what the industry, after all, what are we? We are simply agents who have the ability and appetite to deploy risk capital. But the beneficiary of this will be the startups and growth, and in turn, the country in large.
Yeah, I think you've appropriately framed that the direction in terms of recommendations of this committee need to be to ensure that we actually continue to nurture the momentum that this ecosystem is seeing at this point in time. And Pratibha, that's exactly what I want to address with you. While there are many specific recommendations that the industry has put on the table for the committee to examine, very often in India, we do have the tendency to be overtly prescriptive when it comes to regulation and rule-making specifically. Is that something that you want the committee to be mindful of?
Oh, absolutely, Shereen. And, India has its own challenges in terms of being able to enforce laws. So, you understand where the prescriptive nature of regulations come from. They want to prevent fraud because, it's very difficult to actually get any relief for fraud. Having said that, financial investors, such as private equity VC investors, are not used to sitting with lawyers and trying to understand each word, and our drafting also gets very complicated of laws. So if you recognize, especially for the AIF regulations, which has been already provided a minimum threshold of 1 CR of investment. So, it's not your retail investors that are coming into these AIFs for investment. These are already big players. In that regard, the AIF regulations, as they started and created the onshore fund industry, they were to start with very principle based and provided a lot of leeway to create funds which mirror, the global structures that foreign investors are used to, so that you can attract that foreign capital onshore. I think continuing that thought process is extremely important because you need to be able to provide global structures that investors are used to onshore. So I think overall also in our regulations, that prescriptive nature, when we deal with investors, they don't understand. And you add on to that into the fund industry, which globally is, very, very bespoke. You don't have standard structures. It's not like listings where you have standard rules. So that becomes very important. In terms of, the other prescriptive regulations, there's a reason they came up about, there was sometimes for the promoters, sometimes for strategic investors coming from other countries, not really geared toward financial investors. I think, if you create a separate category for financial investors, which is your private equity VC investors within the existing regulations, that will also help streamline regulations and make them less prescriptive for this class of investors. I think that will significantly also help.
Let's talk specifics now. And one of the big issues that I know that IVCA has been pretty vocal about, and this was again a budget announcement that the finance minister had made, not this budget, but the previous budget, talking about the possibility of global listing by Indian companies, by Indian startups. And then there's been a U-turn on that, and that route and that avenue for now seems to be shut. Is this something that IVCA took up with the committee?
No, absolutely. I think, the fact that Indian startups do not have access to overseas listing today puts them at a competitive disadvantage. Right? They do not have access to global pools of capital as some of their peers may. And so what companies are effectively trying to do or trying to get around the fact that you cannot list overseas is to create a structure overseas. And that is fundamentally the wrong approach from a country perspective, right? You're seeing Indian companies trying to domicile in Delaware or other jurisdictions so that they can access those markets. And what you're doing is effectively, you're taking away taxes, you're taking away jobs. It's just a convoluted way of trying to do it. I think this is a very simple matter, and it's globally prevalent. Of can you allow Indian companies to list overseas? Yes, we understand that India is a country where we are not fully convertible from a capital account perspective, but there are checks and balances that can be built in to protect against those aspects. But this is the point that we've been having conversations and there has been, as you mentioned at the start of the show, the honorable finance minister has talked about it, and so we are hopeful that there will be some constructive progress on this matter.
Okay. Speaking of constructive progress, Mr. Srinivasan, again, these have, of course, been long-standing demands that industry has put forward, and I would imagine that the committee will look into the recommendations that have come in, treating listed and unlisted securities on par, and also the often repeated demand as far as double tax on ESOPs are concerned. Do you believe that there is much more of an open dialogue, conversation around these two specific issues? Is that the sense you get?
Shereen, I think basically the way I would like to think about your question is to say that the timing at which this is happening, when the behavior of the world around the Ukraine-Russia issue has clearly pointed out that every country needs to look after its interests very, very strongly. And I think that is going to spur a lot of the behavior of this government, whether it is to do with domestic capital being more easily available. We have 1.5 lakh or 1.5 trillion rupees worth of pools available from insurance, pension, which are not really being directed into venture capital and private equity. So they will basically think about the fact that Atmanirbharta for domestic capital means that these frictions, like you said, parity between public and private, or making sure that startups become easier to keep in India. The point that Ashley said, one of the reasons people take the startups abroad is also because ESOPs have become such an important part of capital. You cannot afford to pay crores of rupees a year to each employee, but ESOPs can be. But every time if ESOP vests, then you have to pay, exercise it, you have to pay tax. And if you don't allow the employee to vest and it's dangling, then it's not fair to the employee, because they may feel manipulated that you're using tax as a reason, but not really letting them have the candy and sort of dangling the candy in front of them, right, because of tax. So there are, I think, this issue of wanting India to be independent, and the way this government has done various schemes like PLI, out of the box thinking. I'm hoping, and maybe it's just my bias that I want this industry to have this WhatsApp moment, that there'll actually be a lot of changes on parity, carry being clearly defined, and getting maybe, say, a pension fund and Ministry of Labor and Employment run a process to appoint 2 fund of fund managers who will then take that very, very precious money and divert it to the AIFs in a very careful way. And I think automatically what probably FM meant in her remarks in Washington is to say that by doing all these kind of things, then maybe you don't have the incentive to list abroad. I don't think people are listing abroad because of the need for foreign capital. I have a different view on that. I feel people are listing abroad because of the fear of the friction in India. Things like you said, double taxation on ESOP, parity on taxation, what SEBI's listing norms not being light touch, right? After all, everybody wants to be here and they want India to grow. No, everybody has a much broader view of their life than just capital and economics. So I am hopeful the Ukraine war, this government's boldness, and the need for domestic independence, Atmanirbharta, domestic capital to earn money in a country which has got a current account deficit, to export our profits is not the cleverest idea.
Yeah. No, it certainly is not the cleverest idea. But, Pratibha, speaking about this WhatsApp moment that Gopal Srinivasan has referred to twice in the course of this program so far, let's address that issue. I mean, it is a difficult environment that we're currently operating in globally, and that is already impacting Indian startups. We talked about how we have seen funding come off, dry up quite significantly, and that's expected to continue. We're already seeing many companies announcing plans to scale down, lay off. Yesterday, one of the big boys in the edtech space, Byju's, talking about laying off 2,500 people, and that's not a small number. So the environment is challenging. Now, for us to be able to really be able to achieve that WhatsApp moment that Mr. Srinivasan is talking about, in the near term, regulatory uncertainty for sectors like education, where the government looks like it's wants to sort of come in and say, there is need for regulation, or in the gaming space where there is no certainty yet on the GST levy, plus you've got, high courts and governments deciding on what should be, construed as betting, what should not. How much of that is adding to the woes and the sort of downward sentiment within the ecosystem at this point in time? Of course, the global challenges, but some of these domestic regulatory issues, is that weighing on sentiment today?
Oh, very much, Shereen. When you talk to global investors, big issue that comes up is just regulatory uncertainty and certainty on taxes. Again and again, we hear that play out saying, we don't know when we're making an investment. And this is sticky investment. Any investment that goes in through either of these routes, PE or VC, it's a long-term investment, 7 to 10 years. During that period, they're used to in developed markets having stable laws. I've practiced globally. I've practiced in New York, Tokyo, Hong Kong. When we did transactions, we didn't worry about laws as much because the laws were very set, and it was a commercial negotiation that the lawyers were dealing with. But in India, you have to keep in mind that the law might change. The law is changing while you are doing the transaction, and then the market moves. The regulatory approval sometimes can take between 6 months to 1 year, despite best efforts from the government to make that more streamlined. All of this global investors are not used to, and that if we can solve for, I think the global markets, whatever they are facing, will not have as much of an impact on India, because if you read any reports, the Indian macroeconomics are looking pretty good, right? So we should actually be getting advantage of what's happening globally, which we are not, because simply we have not yet been able to solve for this issue. So knee-jerk reactions when and I can imagine there'd be a lot of pressure on the government to start regulating when there is noise around gaming or when there is noise around edtech. But yeah, long term it really affects especially these investors, because they look that I have put money into the country, I will exit in 7 years. Between that time period, at least from a regulatory perspective, my investment shouldn't go to zero.
Yeah, and I think predictability and certainty, especially when it comes to regulation and taxation, is what investors, both domestic and foreign, why just foreign investors, domestic investors as well, want that certainty. Ashley, let me come back to you. The committee has been asked to submit its report by December, and I would imagine that if they do meet that timeline, then perhaps we could see some elements, if not all of the recommendations that the committee makes, find their way into the budget. That is my expectation, and that's how really the budgetary consultation process works. So this is my guess, essentially. But is that your assumption and expectation as well?
Shereen, we are equally hopeful that that does play out in that time frame. We all do know that some things do slip up in terms of timelines. So there is a December deadline. The good thing is that the committee, we believe, has done a number of meetings since it's been constituted a few weeks ago. So they are progressing at a high speed, and they're committed towards meeting that date. The budgetary process does start a few months prior to February. We are hopeful that some of the key recommendations at least get included in the budget, even if not all of them, because we do understand that the government will need some time to mull over. But we're hopeful that some of the things that Gopal talked about, for example, or Pratibha talked about, we're hopeful that some of those things there is some clarity being brought in.
I agree with you. But the budget sort of becomes the seminal event when we talk about taxes and tax changes specifically. But of course, many of the other aspects can be dealt with outside of the budget as well. But Mr. Srinivasan, let me end by asking you, and what gives me hope that a lot of the issues that we've discussed and that you've put on the table here, they require the silos between the market regulator, the central bank regulator, North Bloc. They need much more of a sort of, interministerial, inter-regulatory approach. And just the fact that you've got a former SEBI chief heading the committee, you've got Mr. Mahalingam, former SEBI and RBI as a member. You've got a former member of the GST and the CBIC there in Mr. Nagendra. You've got a former chief commissioner of income tax. That gives me hope that we could perhaps see this committee move on significant changes.
Shereen, I tell you, Mr. Damodaran gave us a small WhatsApp moment when he was SEBI chief, right? He gave us QIB. QIB revolutionized in those days, if you remember, the stock markets like never before. So I have a lot of hope that he understands this from his past record. And if I go through those 160 changes, Shereen, there are only about 4 or 5 which are legislative changes which need to be in a finance bill. So I'm sure that they could be releasing these ideas to the revenue department much ahead of time. If I had to make a bet on this, which I would be like 70% positive that something can happen in the budget, and 70% is a very high number given these kind of businesses.
You better worry about a 28% GST being levied on you, Mr. Srinivasan, for making that bet. But we certainly hope that this is going to be taken forward. If not in the budget, then soon enough. Always a pleasure, Gopal Srinivasan, Ashley Menezes, and Pratibha Jain. Thanks very much for joining us here on this edition of Young Turks to talk about the recommendations that are being considered and being reviewed by the expert committee that's been set up by the government, headed by the former SEBI chief, M. Damodaran. Will it be the Indian startup ecosystem's WhatsApp moment or not? That's the big question, but we'll be tracking that story very closely right here. We'll take a break. There's a lot more coming up. Don't go anywhere. We're back in a moment with more.